I'm Jessica Guelph.
I'm Jolie Cutler.
And I'm Kristen Bueno.
And welcome to the 10 o'clock news.
This morning, we will be discussing important economic news that has occurred throughout the past 4 decades.
We will be talking about the Great Inflation of the 1970s, the farm financial crisis of the 1980s, the financial crisis in East and Southeast Asia in the 1990s, and Hurricane Katrina in the 2000s.
The economy in the 1970s was affected due to the Great Inflation. Inflation is defined as the increase in the general prices of goods, resulting in the decreased value of money.
Inflation is usually caused by strains on the nation's finance and economy. The known causes of this inflation were oil prices and the stock market.
In the 1960s, the average rate of inflation was between 2 and 3%. In 1974, the average rate rose to 13%. The expenses that the United States incurred for the purchase of oil began the downward spiral of the United States economy.
The rise of inflation is partially due to the increase of oil prices.
From 1973 to 1974, the price to purchase oil from Saudi Arabia rose from $2.59 to $11.65 a barrel.
Throughout the 1970s, people were using the stock market less and less due to the end of the Great Depression.
The market dropped 40% of business in an 18-month span.
Due to the lack of activity in the stock market, the economy showed little to no growth.
Because the value of money decreased due to the inflation, workers were demanding higher wages. This increased the cost of labor for businesses.
Since it was costing more money for businesses to employ their workers, unemployment rates started increasing.
By the mid-1970s, the unemployment rate reached about 8%, and in the early 80s reached over 10%. The farm financial crisis of the 1980s was a difficult time for farmers in the United States. A majority of farmers had to purchase their own land on credit, forcing them to take out loans. Farmers were expanding their land because foreign markets were opening up and purchasing from the United States. Because the demand for foreign goods was increasing, and because at the time interest rates were relatively low, farmers felt it necessary to expand their land by purchasing on credit and taking out bank loans. Then, in the 1980s, the economy started to go bad. This and other outside factors caused interest rates to rise, making it hard for farmers to pay back their loans. Since the country was going through an economic struggle, people were less likely to purchase expensive farm-made products. The demand was extremely low, and prices for these goods decreased, so farmers were not making their money back. Now we turn to Jessica Guelph, who was fortunate enough to be interviewing a former struggling farmer.
Thank you, Jolie. Here we have Farmer Green to tell us about the struggle she faced on the farm. Good morning, Mrs. Green. Thank you for taking time to educate our viewers on the crisis.
You're welcome. Glad to be here. What would you like to know?
Is it true that the farming crisis occurred as a result of the drought in 1986?
Yes. Unfortunately, this has been one of our worst droughts for farmers in our nation's history.
I see. How did the drought affect you personally?
It was a very difficult time for my family and myself. We could not produce our normal share of crops. I had to take loans from the bank hoping that things would change, but that didn't happen, so I was not able to pay them back. Therefore, we ended up in major debt.
How did President Carter's trade embargo on Russia affect the farming population?
The embargo was opened when Russia invaded Afghanistan. This prevented the U.S. from selling goods into Russia, and this caused a trade deficit on our goods.
How did hard economic times in other countries affect your income as a farmer?
Other countries also experienced tough economic times and could not purchase and sell as many goods overseas as they could before. This caused us to lose a lot of money, and they had previously invested in the farming equipment, which we could not make back.
Thank you for your time and knowledge. It was very helpful to our viewers. Now a message from Farmer Green's Organic Farm.
Want freshly grown organic produce? Come down to Green's Farms, where everything is grown at a safe and organic environment.
Delicious! Best apple I've ever had!
Welcome back.
Meanwhile, trouble strikes in Southeast Asia as the 1997 financial crisis has spiked from Thailand and has begun to spread to many countries, including Indonesia and Korea.
Yes, it all started when the Thai baht, the currency in Thailand, collapsed after the Thai government was forced to float the baht. Floating means that a country has the authority to allow the value of their currency to fluctuate due to the lack of foreign currency to support its fixed exchange rate. This is due to supply and demand.
Before the collapse, Thailand suffered major foreign debt which bankrupted the country.
The collapse soon spread from Thailand to Malaysia to the Philippines and then to South Korea. These countries placed blame mostly on Eastern Asian countries.
Southeast Asia and Japan soon noticed a downward trend in the value of their currency and in their stock market.
In the early 1990s, the Southeastern Asian economy was doing extremely well. It was even known as the Asian miracle.
In particular, Asian real estate was at an all-time high, so much so that the government regulators did not see it necessary to put in place strategies to regulate this immense growth.
Throughout early 1997, many nations in Asia reported on minor problems regarding the strength of the Asian currency.
Most economists at the time assumed that the nation's economy would remain at its previous high and continue to thrive. So it was a shock to investors when the Thai baht collapsed later on that same year.
The currency quickly lost value and caused instability to spread around the area.
The continuous loss of stability throughout the nation caused many investors to withdraw credit and investment that they were putting into the country.
The economic problems faced by the country was also accompanied by political stress, especially on Indonesia.
In the end, the International Monetary Fund, IMF, was forced to step in and help to restore stability to the Asian economy because economists began fearing that the financial crisis would spread to other countries through Asian trade.
The crisis took about 18 months to settle, but a lesson well learned as a result.
An isolated economic event can easily affect other countries of economics and can result in regional problems, especially with situations dealing with real.
Throughout the year, the people of New Orleans faced many hardships. Exactly 1 year ago today, a very tragic event occurred.
On August 29, 2005, Hurricane Katrina hit and caused $96 to $125 billion worth of damage.
Due to the hurricane, many New Orleans citizens were left homeless, and 2.3 million were left without power. In addition, many industries in New Orleans were left destroyed.
The port of New Orleans was damaged in the storm, which disrupted the city's ability to import and export products.
As a result, the city experienced a shortage of petroleum, causing a major gas shortage throughout the entire southeastern United States. Katrina affected 19% of the United States oil production.
113 offshore oil and gas platforms were destroyed during the hurricane, and 457 oil and gas pipelines were damaged.
The extreme shortage of oil caused the price of gas to dramatically increase from $2 a gallon to $5 a gallon.
In an attempt to stop this extreme increase in gas prices, the United States government had to release oil from its stockpile in the Strategic Petroleum Reserves. The purpose of this reserve is to maintain a stable level of oil and release oil when necessary.
The only two instances where the United States were released from the Strategic Petroleum Reserve were the hurricane and the Desert Storm.
Due to the amount of homeless people and the damage to people's homes, the economy was being challenged by the minute.
The hurricane resulted in $40 to $66 billion in insurance losses.
As the years pass after the hurricane, we will always remember the damage, devastation, and the lives lost.
It is a continuous process to rebuild both the community and the economy in New Orleans. Thank you for watching. We hope you learned more about some of the economic events and tragedies in our nation's history.
You guys are moving that.
That's all I've ever had. So come down to Green's Farm, where everything is just so
The embargo was opened when Russia against Demi Jolie.
Good morning. I'm Jessica Wells.
I'm Jolie Kotler.
Kristen!
Farmers in the United States.
Oh.
Hold on.
Okay, Kristen.
Alright, 1 second.
Kristen.
Phone down.
It's my supervisor.
Nope. God.
We're gonna have to talk slower.
The struggle in the United States.
It's 12 o'clock.
Katrina in the 2000s.
Yes!